Nobody tells you this when you open your first bank account. The bank you walked into, the one with the friendly logo, the free checking promotion, and the teller who smiled when you signed the paperwork, that bank does not treat everyone the same way, not even close. The person who opened an account the same day you did, same branch, same city, same bank, might be getting phone calls from a dedicated advisor, access to loan rates that were never posted on any board, and a private room with better chairs where someone who knows their children's names asks about their long-term goals, and you're on hold, listening to the same 30-second loop of music, waiting to speak to someone reading from a script, same bank, completely different institution. Today I'm going to walk you through every single level, from a negative balance to ultra-high net worth, and show you exactly how the treatment changes, why it changes, and what it means for your financial life right now. Because understanding this system is the first step to moving through it. Level 1, overdraft. System doesn't know your name, it only knows your balance. Your account goes negative, maybe $4, maybe $400. The amount almost doesn't matter because the response doesn't scale with the severity. It just activates, the overdraft fee hits within hours, $35 at most banks. And some institutions charge it per transaction. So if 3 small purchases process while you're negative, you owe $105 in fees on top of the deficit you're already carrying. Think about the math of that for a second. If you had money, you wouldn't be overdrawn, but because you don't have money, you now have even less. You try your debit card at a gas station. It declines. You try again. It declines again. There's a line behind you. You're doing arithmetic in your head faster than you can finish, and the card is still declining and people are watching. That's what financial stress actually feels like. Not dramatic, not cinematic, just a card declining while strangers stare. The bank offers you overdraft protection. What that really means, they'll cover the charge instead of declining it, and charge you $35 for the privilege of not embarrassing you in public. American banks collected over $7 billion in overdraft fees in a single recent year. The majority came from a small group of accounts that were chronically overdrawn, the same people, paying, repeatedly, for the privilege of being broke inside a system that charges you for it. At this level, you are not a customer, you are a cost the bank is recovering. Level 2, low balance. Not overdrawn, you're just invisible. You pull the account back to positive. $200, maybe $400, sometimes $600 before rent drops it again, or not in the red anymore. You're in that quiet zone the bank services but does not value. The monthly maintenance fee hits automatically. $12 or $15 because your average daily balance didn't hit the minimum. Usually $1,500. Sometimes $500 depending on the bank. Here's the part that stings. If you had $1,500 just sitting there untouched, the fee would disappear. But because you don't have it, you pay for the account that's supposed to be holding your money. You apply for a credit card. Maybe you get approved for a secured card, which means you deposit your own money as collateral, so the bank can lend it back to you and charge you interest on it. You are lending them your money, so they can lend it back and profit. This is legal. This is standard. And this is how credit gets built when you're starting at the bottom. The service isn't hostile here. It's something worse. It's indifferent. The teller is polite. The app functions fine. You call with a problem, you wait on hold. You reach someone reading from a script who can solve simple issues and escalate everything else to someone you'll never speak to. There is no relationship here, just a transaction. You are a number at this level, a small one, and the bank's interest in small numbers is entirely automated. Level 3, stable income. You didn't change, your pattern did, and the bank noticed. You get a better job, or the job you had starts paying real money, direct deposit, $3,200 a month every 2 weeks. Reliable, the bank doesn't call to congratulate you. There's no letter, no handshake, but something changes algorithmically. The pattern of your account shifts from irregular and low to consistent and moderate. And the system responds by quietly moving you into a different behavior category. Credit card offers start arriving. Real ones, $2,000 limits, $3,500 limits, still high interest, 22 to 26%, because your credit history is short and the bank is still pricing risk. But the door is open now. The institution that had nothing to offer you 6 months ago is now mailing you things. The monthly maintenance fee disappears because your direct deposit qualifies you for a waiver. It's a small thing. But after paying that fee long enough, its absence feels significant. You apply for a $5,000 personal loan. It's approved in 48 hours at 11%, and for the first time, the bank works the way people always said banks work. You needed something. You applied. You got it. You are a customer now. Recognized. Serviceable. You matter to them in the way any customer matters to a business. Meaning, you matter as long as you're generating revenue, and you'd be replaced without ceremony if you left. Level 4, growing savings. Bank isn't warming up to you. The math is. Savings account, $18,000 investment dollars account, $22,000 credit dollars card, paid in full every month. You built this through consistency. Not luck, not a windfall, just ordinary discipline over several ordinary years. And your financial profile now looks fundamentally different to a bank's risk models than it did 5 years ago. Credit limit increases start appearing without you asking. $4,000 becomes $9,500. then $14,000. The bank is extending more rope because your history proves you don't need it. Loan rates get better. The car you finance this time comes with a 6.8% rate instead of 11%. Not because anyone likes you more, because your credit score and asset profile shifted the risk calculation in your favor. And here's what that actually means in practice. Better rates equals you pay less for the same things. Paying less equals more capital stays with you. More capital equals faster compounding. The system is beginning slowly, quietly to tilt in your direction. If you walked into a branch and mentioned you were thinking about switching banks, someone would try to retain you. With an offer, that is a different experience from level 2. It's not intimacy, but it's the beginning of leverage. Level 5, high savings and assets. Same bank, different phone number, combined assets, north of $150,000. Your dollar's not wealthy by what comes later in this conversation. But you're in the top tier of what most retail banks see daily, and the treatment reflects it. The phone line is different now. There's a priority queue, shorter hold times. The person who picks up is more senior, with actual authority to waive fees, make exceptions, and approve things without escalating. When something goes wrong, and something eventually always goes wrong, the resolution is faster. Because the person handling it actually has the tools to fix it. A dedicated banker gets assigned. A named contact. Someone who emails you directly. It sounds like a relationship. In some ways, it genuinely is, even if that relationship exists inside a commercial frame. They're attentive because their performance is measured on retaining accounts like yours. Understanding that doesn't make it less useful. The access is real regardless of why it exists. Pre-approved mortgage offers. Premium credit cards with actual rewards. Investment products that weren't on the table before. You are a preferred client now. Named, known, flagged as someone worth protecting. Level 6, high net worth. No longer being sold to, you're being consulted. Somewhere between $500,000 and $1 million in investable assets, the bank stops being a place you go. It becomes a service that comes to you. Wealth management is offered. Financial planning, investment advisory, tax coordination, estate guidance wrapped into one relationship. The quality varies. Some advisors are exceptional. Some are expensive salespeople in good suits. You learn the difference quickly because the difference costs real money. The conversations change completely. Someone is asking about your goals, your timeline, your risk tolerance, your family. Loan approvals move in days instead of weeks. The paperwork is lighter. When something goes sideways, a wire transfer, a frozen account, it gets resolved in the same conversation. No callbacks, no scripts. Someone with actual authority handles it in real time. You are not a customer at this level. You are an asset. Level 7, very high net worth. 735, 820. The rules still exist. They just bend differently for you. Above $5 million, the bank starts offering things that don't appear on any website, products not publicly listed, rates not posted anywhere, access to investments gated behind accredited investor requirements, and minimum commitments most people never reach. Your mortgage rate is meaningfully lower than what a level 3 customer would be offered. Not by a little, by enough to represent tens of thousands of dollars over the life of the loan. Your advisor isn't a generalist anymore. It's a team, one for investments, one for tax strategy, one for estate and trust structures. They coordinate. They meet quarterly. In a room that doesn't look like the room where level 2 customers wait. The rules governing retail banking, minimums, waiting periods, approval timelines, fee structures, technically still apply. But the bank's internal policies have discretion built in. And that discretion is exercised in favor of accounts that generate significant revenue every single time. Level 8, ultra wealthy. This isn't better service. It's a different institution inside the same building. Private banking is not wealth management. The same way a private charter isn't first class. They both get you there. The experience is not comparable. At this level, you don't have a banker, you have a private banker, a title that carries specific weight inside the institution. This person manages fewer than 20 relationships. Their entire professional focus is those relationships. They know your children's names. They know about your foundation. They know what you're building and what you're protecting. The deals here are custom. Loan rates are negotiated, not published. Investment minimums are waived because the relationship justifies it. Documentation that takes a retail customer 2 weeks is handled internally in 48 hours. Fees that technically apply are routinely waived before you even ask. Exceptions that require manager approval are approved before the manager is formally consulted. The system that was automated and indifferent at level 1 is now human, attentive, and oriented toward yes. You are not a client at this level. You are a relationship. Losing you would affect someone's career. And that is a kind of power that no other level of this conversation comes close to. Here's what I need you to understand before you close this video. The bank didn't change. The building didn't change. The logo on the door is the same. What changed at every single level was one thing: the size and consistency of the assets behind the name. That's it, which means the treatment you receive from financial institutions tomorrow is being shaped by the financial decisions you make today. Every level in this system is accessible. Not fast, not easy, but accessible through the same boring, unsexy, consistent habits we talk about on this channel every single week. The $500 you automate this month doesn't just build a balance, it starts moving you through levels. And the higher you move, the more the entire system begins working for you instead of against you. That's the game. Now you know the rules. If this opened your eyes, subscribe.